Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the 5 things you can do out there when your stock goes down. So after you invest in a stock, there's a 50% chance that stock might go down. There's a 50% chance that it might go up. It's 50-50 at the end of the day, guys, in the short term at least, on if that stock might go up or down. So 50% of the time, you're probably going to be down on a stock. So we're assuming today, let's say you invest in a stock, and over the last 6 months, it's gone down 20%. So you're like, damn it, what am I doing wrong? What did I do? You know, my stock's down 20% in the last 6 months. Well, you really have 5 options you can do to either make you some money or save you some money. I'm going to go into detail on all 5 of those subjects, and we're going to dive deep onto what do you do if your stock's doing this or that, and those kinds of things, guys. Leave me in the comment section if you guys enjoy this video today. I would love to hear it. I would love to hear your opinion on these 5 steps, and if you plan on doing any of these in any current stock positions you guys own, I would love to hear that. Leave this video a thumbs up if you enjoy it. So let's get into this, guys. Number 1, you can buy more stock. If, let's say this is a great one, if you are still as confident as you were when you started buying that stock, and the business fundamentals have not changed negatively, then that's certainly a sign that you can go ahead and buy more and lower your cost basis. I've done this on so many stocks over the course of my investing career, where a stock, for whatever reason, you know, it's just hated stock, you know, the investment community doesn't like it for whatever reason because of decisions that were made in the past or things that have happened in the past, and a lot of people lost faith in the company. It pushes the stock down a lot. I buy in, the stock still continues to go down. So what do? Every 5 to 10% down the stock goes, I go ahead and add some shares. Go ahead and add some shares. Go ahead and add some shares. So you can buy shares straight up and lower your cost basis. So maybe you had a $15 cost basis at first, and the stock's at $12 now. If you were buying on the way down, maybe you have a $13.50 cost basis or a $13 cost basis. So if the business fundamentals haven't changed and it's still a great company, you know, the results are showing it's a great company, then why would you go ahead and do anything other than buy more? It really makes no sense. If you were feeling confident in it at this price, and once again, nothing's changed bad in the business underlying the fundamentals, then why shouldn't you buy it at a cheaper price? It's like saying, you know, I'm going to go to the store. I want this T-shirt, this specific T-shirt. It's for $20 today. You know, I'm going to go ahead and buy that shirt today. You know, I really like 2, but they're out today. And then they get them in stock the next day, and all of a sudden they're selling them for $10. And you're like, you know what? Since that shirt's down to $10 now, now I don't want to buy the shirt. That makes no sense at all. It's the same thing with the stock market. If you believe in the fundamentals, you're confident in them, and the company's being run well and those kinds of things, it makes no sense why not to buy some more if that stock has gone down the short term, guys. That's number 1 option you have out there. Number 2 option, you could sell your entire position or part of your position. This is a good option if you were just wrong about the business fundamentals. If, say, the company's new products and new services, whatever, you know, that are coming out and whatnot, they're not performing well, then you can maybe go ahead and sell off that position and say, you know what, I just screwed up in this one. It was just a bad decision. You know, the stock deserves to go down. You know, it's deserved to be down because I just made a bad decision. You know, that new product, that new service they offered, it's just not clicking. Revenue's down, profits are down. It's not working out. I need to get out of this one. That could absolutely be a legit thing, guys. Sometimes you're just wrong on a position. Now, of course, if you're a long-term investor, you know, you're thinking years out into the future, just because they might have slipped up in the short term, it doesn't necessarily mean you should sell your position or any of your shares and whatnot. You just have to decide, is it so bad that it's like, you know what, I just can't do this. I just can't do this. You know, I thought, you know, these products or these services were going to be really great they had, and they're just stinking up the joint, and I don't see this changing for the long term. If you don't see it changing for the long term, guys, then that probably is just a bad stock you picked, and you probably just need to get out of that one. You know, that's fair enough. There's no shame in the game of getting out of that. Sometimes you might just slip up. You might just make a bad investment decision. You might just say, you know what, I screwed up on this one. I lost 20%, 30%, whatever amount of money you lost. And you say, I need to learn from this in the future. I need to adapt and those kinds of things. Sometimes just sell off a position, guys. I can tell you with my GoPro position, if they don't smash numbers throughout this year, smash numbers this quarter, what they did the year before, and the next quarter, and the next quarter, if they aren't doing that kind of stuff, I'll be out of that position. I'll say, screw it, man, I screwed up on that one. Absolutely. They need to be smashing numbers, 20, 30, 40% pretty much every quarter for me to say, okay, I was right about this one. So if that didn't happen, I would sell my position and say, screw it, I need to put my money in a better stock somewhere because I was wrong about the products and services at launch. And that's what you guys have to do. You just have to look in the mirror sometimes and say, you know what, I screwed up on this one. Let me just sell it. So that is option number 2 out there, guys. Option number 3 is hold your shares. You're not buying anymore, you're not selling anymore regardless. Sometimes you want to do this if you've built up such a big position in a company where you're like, you know what, even if it does go down, I don't want to buy anymore because I have such a big position already. I've been invested in it so much that I don't want to buy, I don't want to put any more money into it. At the same time, if it does go down, I'm not going to sell it. Sometimes you get in that just kind of mode where if you got a really big position built up, it's not worth buying anymore, even if it does go down. Currently, once again, on GoPro currently, that's a stock I'm invested in. It doesn't matter if that stock went down to $7 or $6, I would not buy any more. Not because I don't believe in the company or those kinds of things, just because I have such a huge position built up on him already that I don't want to put any more money into it. If I put any more money into my brokerage account, it will be to go into new stocks at that point, not to go into the one I've already built such a big position in. So that's a position I'm not selling, I'm not buying, I'm not doing anything. I'm just holding that position for the years to come and see how everything runs out as the time goes on. Sometimes that happens, guys, where you just want to hold, you don't want to buy, you don't want to sell, you don't want to do anything. It's just a hold position, guys. That's option number 3 you have out there. Option number 4 you have is to buy long-term call options. So that stock went down a ton and you still believe in the business fundamentals. You can buy long-term call options. Now, long-term is, a year, 2 years out. Right now, you can buy 2019 call options on a lot of companies. They expire in January 2019, so that's 2 years from now. That's a perfectly legit way you can make a lot of money if you feel very confident in that company in the next year or two that they're going to really smash numbers. They're going to, the whole mentality around that company is going to change, those kinds of things. Of course, if you're super long-term thinking, 3 years, 5 years out, you cannot buy call options that far out, unfortunately. It's limited around 2 years. But it's certainly a great option out there, guys, if you want to have much bigger gains, but also take a much bigger risk. Because, of course, with call options, if that stock is not at a certain price by a certain date, when that does expire, you're going to lose all your money or a substantial amount of money. But however, if that stock goes up drastically, 100% gain, a 200% gain, something like that, you're going to make out like a bandit on those options. So that's another one out there. If you don't want to just buy shares straight up, you maybe want to invest a smaller amount of money. You go ahead and buy some call options that are, going to take a 20%, 30% gain in the stock if you really believe in it that much, and then hopefully get a potential huge gain on that one, guys. So long-term call options, that's certainly a great one for you. That's number 4, guys. Number 5, you could buy short-term put options. Now, if you understand what short-term put options, that's basically betting that the stock is going to go down in the short term. You say, Jeremy, that makes no sense. You're buying in the stock for the long term. Why would you want to buy short-term put options? Well, sometimes short-term put options can be a great avenue for you. Now short-term put options, I mean like they expire in about a month from now, 3 months from now, those kinds of things. Maybe you're just in a hated company. You might want to buy some short-term put options. So if that stock does continue to go down, you can then sell those short-term put options for a lot more than you bought them for, and then go ahead and funnel that money into buying the stock straight up. So you make a ton of money for that stock going down because you bought those short-term put options and the stock goes down, let's say, and then you get to go ahead and buy those shares of that company that you believe in for the long term at a much cheaper price than when you started buying them. So that's a fabulous way you can do it, guys. But this is what they call hedging a position, basically, where you're betting big on something, but you're also covering your ass on the bottom line by putting a small amount of money into either, say you're shorting a stock, you would then buy call options in the short term. So in case that stock went up, you would make money and then go ahead and be able to short it again. Same thing here, guys, where you go ahead and buy a ton of shares in it and then buy some short-term puts. And if that stock continues to go down in the short term, you're going to make money. You can sell off those put options and then go ahead and invest in a much cheaper price, guys. So that's another fabulous option that a lot of people don't think about. A lot of people don't even know you can hedge a position like that. Obviously, all big investors know that and those kinds of things, and many advanced investors, but a lot of moderate investors, a lot of beginners in the stock market, they have no clue you can hedge a position like that, guys, where you can make money really either way. So I hope you guys enjoyed these 5 things you can do if a stock goes down. Like I said, it's a 50-50 chance on if your stock goes down when you invest in it. It's 50-50. So hopefully these helped you out greatly, guys, in understanding what your options are out there. If you come across this video and have not subscribed yet, you may want to talk about the stock market on this channel the most, like we did today. We also talk personal finance on the channel. We also talk entrepreneurship. I'm an entrepreneur. I give entrepreneur tips on the channel. Thank you for watching, guys, and have a great day.